The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 31st, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific day. Let's make sure we do everything we can to have a fabulous and a fantastic weekend. Of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I, we make that one little 2x4 shift, it means we can find that gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances that the bulls and the bears are throwing out to the market. We'll go take a look at the indices. We'll go take a look at some equities, some commodities, some currencies, and anything that you'd like. I'm absolutely grateful for your presence, and I'm here to serve you. So feel free to pick up that phone, dial on at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is fantastic Friday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 2 points, trading at 17,747. Let's go take a ride on a 747. The S&P up 3 points, trading at 2111. NASDAQ Composite up 17 points, trading at 5146. You've got the Russell 2000, strong like bull, up nearly 12 points, trading at 1244. The DAX ended its week out at the 11,308 area. The FTSE ended its week at 66.96. Gold's up about $6, trading at 10.94. Silver's up 3 pennies at 14.73. Light sweet crude back $1.25, trading at 47.28. Leading the charge, the upside is Expedia. So it's at 747. It's everybody's planning trips on Expedia. That's up about $11, up 10%. You've got Quaker Chemical up 13%, $11. Columbia Sportswear, they make nice stuff. They're up 17%. That's up about $11. Regeneron Pharmaceuticals up 10. To the downside, LinkedIn getting crushed. Although I haven't looked at the stock, I looked at it last night. I know it's trading down into support. I think I was in the 205 area. Outer Wall down about $10. You've got Mettler Toledo International off $8. And so where do we begin? Where would you like to begin? Okay, let's go ahead. Let's go begin there. Let's go take a look at what's going on inside the world of our price oscillators, inside the world of our summation index out here. As we take a look at the three indices that I'm able to follow for you out here, as we take a look at least on this system and this set of screens out here, all three, meaning the New York Stock Exchange, left-hand panel, center panel is the NASDAQ Composite that had been weak. That is now above zero. And then on the right-hand side, we've got the Dow. So all three of our price oscillators are above zero. What does that mean? It is like watching a football game and knowing which team is in control, the Bulls or the Bears. Those are the two teams that play this game that you and I take a look at. And in this case here, when the price oscillator gets above zero, that tells us, you and I, the referees out there, that it is the bulls that are in control of the market. And in this stage here, the New York Stock Exchange, which has been the strongest, do not let anybody fool you. The New York Stock Exchange has been the strongest off the bottom. The New York Stock Exchange has had the best breadth off of the bottom out here, and that says that what the NYSE is likely going to do here, it's likely going to go from where it was just 3 days ago on Tuesday morning. It's going to go all the way from where it was in the extreme oversold condition, and it's likely going to make its way all the way to that extremely overbought condition. And if it does that, if it gets above 150, that's going to really make things interesting. If it gets up to, we'll call it 149, which is all that it got up to right back here on the trading day of July 16th. It looked all so promising here. Let me put my little my little dialogue box, you can see 148.30 was the reading there, which was close. But it was no cigar. I think David White posted something about a close but no cigar, and this would be a close but no cigar out here. The reason that I say why that's important is because when the New York Stock Exchange price oscillator gets above that 150 level, that's where you've got some real promise of hope of future higher prices to come. It has always worked that way. Now, I use that term always to mean 98% of the time. We're not there yet. When we get there, then we'll go ahead and we'll figure out what the market is going to do. At this stage, though, what it looks to me like it wants to do, because we can see a couple of different things out here. Number one, we can see the 0.786 retracement really on its horizon out here, 10,947.79. The NYSE has been stronger than any of the other indices off of this bottom here from last Tuesday. You've got the NASDAQ composite price oscillator now back above zero. You and I are the referees. If it ends if it ends the day that way, that says the bulls are in control of the market. That says that with them being in control, we'll go switch over and take a look at their readings on here. That says that that's going to be enough to just continue to power, even if the NYSE, which has really done all of the heavy lifting here. All of the heavy lifting. And here you've got more of the, the wider breadth of the market. It says it can take a rest, and maybe it does take that rest, and the price oscillator just rises towards that 149 level, and price gets up into 10,947. Maybe it's just right down to the bottom of that descending price channel out there. When it gets there, you and I will know, based on these readings and a few other things going on inside the market, what the market's next move is. What I can tell you is that if that price oscillator reading does get above that 150 level out there, that is where it says, hey, this market has got higher to go throughout August, at least the first couple of weeks in August out there. We're not there yet. Look, anticipation is perhaps that's one of the most important powers that you and I can have out there. That's what the masters absolutely do, is they anticipate things ahead of time. That's the cool thing about technical analysis. We can anticipate what the markets are going to do. We can prepare for both sides of the trade out here. Now, inside the NASDAQ composite, as we take a look at it, let me see, there we go. We can see that today, price oscillator reading getting above zero. That's good. That's good for the bulls. That is not good for the bears out here. If it ends this day, it's when the price has actually made it to its 0.618 retracement level, 51.53 out there. Look, oftentimes 0.618 retracements on either side is where the market, goes kaput and starts rolling over, and it could set up the A to B equals CD. In this case here, it would be to the downside if that were to occur. Now, if the price oscillator ends the day above zero, we come in on Monday and it loses it. It's like a fumble. It's like, the bulls took over, ball was intercepted, it was fumbled. I don't know what the next play is going to be. We can anticipate, though. And until we see them actually fumble the ball, NASDAQ Composite says it will want to go ahead and get back to the 51.88 level. Maybe all the way back up to its size at 52.30, about 52.32 out there. So that's its message as we speak right now. If we go take a look at what's going on inside the Dow, really been flattening out here as of late. Made a nice run the first 2 days, meaning the 28th and the 29th. Yesterday, Thursday, today, Friday. Hasn't done a whole lot. It likely, though, with the composite getting above that zero line, would say, the Dow ought to make its way up to 17,855. Still is the buyers, still is the bulls inside this game that have control of the marketplace. Now, what we haven't talked about is the Russell 2000 small caps, which have decided to wake up. So let's go do two things here. Let's go take a look at the IWM, get a feel for what's going on out here, and then let's go take a look at, so I can give you a better picture, I'm going to go look at the daily contract for the Russell 2000 futures out here. Now, here's what you and I know. Let me do this. Let me get my set of tools out here. Let me move these Fibonacci numbers, and I erased the A to B equals CD. Let's just go ahead and put that in for you. So what the IWM did, what the Russell 2000 did, so both of them, what they both have done is they both made, well, in this case here, the IWM made very close to a 1-to-1 A to B equals CD to the downside. In fact, let me just do this here. This is why, if you were trading these vehicles, what I would, I don't know, is implore, difficult? Is that like a really serious word out there? I would highly suggest, how about that? I would highly suggest that you get access to the futures contract, because I believe what we're going to see here, I probably should, I'm saying that without even knowing that, right? But I know that we're close enough here that what's likely to come is, if I go take a look at the futures contract, intra-session during the day before the cash market opened up, probably, qualifying it there. I got to have a little qualification. Here, I'm in the daily contract right here. Let's go see if this actually had the A to B equals CD panel as well. Let me turn that tool back on. Let me turn off a couple of these channels out here and trend lines. And let's go measure its A to B equals CD, because I think it completed here. Let's go see if it actually completed the one-to-one. Whoa, what the heck did I do there? That is got not the one-to-one out there, so let's, I don't know why that, now we'll put that in. There we go. There's your one-to-one A to B equals CD. Okay, so you can see inside the futures market, right, it's open almost 24/7. You can see it went ahead and completed its A to B equals CD to the downside. Now, back into the IWM. So the IWM, when I say it completed an A to B equals CD pattern, that's really because of its brethren, its cousin, inside the futures contract that actually did that. Voila. There you go, like Gus in my big fat Greek wedding, except I'm not spraying the index all over you. So we fast forward here to the IWM. What is it doing? Well, if we take a look at one of its retracements, the same retracement that you and I just measured when we took a look at the summation index of price oscillators inside the NYSE, NASDAQ Composite, and the Dow. So I'm using the same, coming off the same set of swing points, which is July 16th down to the low out here on July 28th. What we're going to see is that the IWM just simply woke up today. Yesterday just slightly got above the 0.382 retracement. So this is on its way to the 0.618 retracement out there of this C to D leg. Now, the old, I believe it's, well, I can't say that. The IWM completed the A to B equals CD. Typically what happens, and go ahead, and I'll go ahead and I'll turn it on. We'll put it in different colors out here. These are the retracement levels of the A to B equals CD pattern out here. And what this says, and what this shows you and I, is that today what happened inside, what has happened inside the IWM is it's moved above the 0.382 retracement level. That's really your first objective of any buy the D point. And this was clearly a buy the D point. You might say, why? I would say, well, number one, you had a bullish reversal signal. In the case of the IWM, you're looking at something that's very close to a hammer candle. But even if it isn't, because of that wick to the upside out there, and I say it makes it a little bit questionable, what it is a key reversal session. Key reversal session, as you and I have covered so many different times before, is one where you are in an extended condition, A to B equals CD pattern qualifies. You take out the previous day's highs and low, and what you do is you close in the opposite direction. We'll come back and we'll take a look at the IWM, but what's interesting and why I leave you with that key reversal session is let's go take a look at Goldilocks. Notice anything here? That was a pretty smooth, I have to admit, a pretty smooth entree into a key reversal session that we're seeing inside of your friend and mine, Goldilocks, and the three bears that may be going away. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, I mentioned we would go take a look at the Russell 2000. I've got a question that came in from Larry C. in good old Detroit, the Motor City, with regard to the Shanghai. So we'll go take a look at that in a moment as well. If we take a look at the Russell 2000, now this is the daily contract. This is the futures contract out here. I'm going to pull this back. So we know we've got an A to B equals CD to the downside that completed in nice fashion out there. If we go take a look, oops, I didn't mean to do that. Let me put some of these other trends on the screen out here. What I want to show you, because Russell 2000 gets beaten up a bunch out here, and you and I, we're going to unbeat it. We're going to unbeat it because we're going to take a look at the nice little gradual rising price channel that has been in place inside of the Russell 2000 since the early October, middle October of 2014 timeframe out there. We can see that price here stopped on the way down, back on that low that was made this week here, July 28th. Remember the body of the candle truly being the essence of price out here. That is where price stopped. So what is key, if you are long or short the Russell 2000, what I can tell you is you don't want to be long if this price channel gets broken. It's been in place for a while out here, as I say, since the middle of October. And if this breaks, all holy heck might turn loose. Might turn loose out there. Now, I think it probably will. Now, when I say might turn loose, what the heck does that really mean? Well, like if we just simply use our Fibonacci numbers out here, any break of that price channel, which it's not threatening to do that as we speak right now, likely brings the 11,000, boy, how about that? 1127 area into play. That's the 0.618 retracement if it were to make a move to the downside. Now, what it has been doing as well, it's had that little sub-correction price channel. Those are the red diagonal lines going inside my screen out here. So it's just simply corrected. If the price oscillator inside the NYSE gets above that 150 mark out here, man, I can make the case that the Russell 2000 will go ahead and get all the way back to the top of its price channel. So that's one of the patterns that you would anticipate. I don't know what's going to happen next exactly. My subscribers know exactly what it is that we are looking for in a couple of different marketplaces out there, what to have happen. Now we're just waiting for the markets to actually confirm that. If I take a look at longer-term trend lines inside of the Russell 2000, let's go back quite a ways here. Again, just so we understand what's going on. If you go back simply, this is a really important trend line as well, and that is off of the October 2011 timeframe. On this move down here most recently, price did not get to that area. Any break of that little shorter term rising price channel, that's another area to be looking at. I don't remember the number that I gave you, but around the 1156 area becomes a test of that trend line out there. If that trend line gets broken, then that could spell even larger trouble ahead. But at this stage here, I'm not saying that's going to happen. I'm saying that's what we would be watching for on any price pullback. So that's what's going on inside the Russell 2000. With regard to a question from Larry C. in good old Detroit out there, OPA is what I would say, since I mentioned Gus from my big fat Greek wedding out there. If we go take a look, I just got to find it here. If we go take a look at the Shanghai, the question was, the weekly chart looks like it is pulling back into a hammer candle in essence from a couple of weeks ago. So weekly chart. So let's go take a look at the weekly chart first. Let's go see that hammer candle out here. And when we take a look at it, there, voila, there it is. On this trading week, the week that began July 6th out here, that was a hammer candle. Now, what does that mean? Well, it's got a couple of different meanings. Number one, you like to see a hammer candle, just like we looked at inside the IWM as an example. You like to see those things form at the completion of a pattern. A lightning bolt, A to B equals CD, would be a nice one. In this case here on a weekly chart, we don't have that. A hammer candle, just simply by its name, and how the conversion from the Japanese interpretation is just simply the market is trying to hammer out a low, hammer out a bottom out here. Now, what you and I know is that, and as it's being pointed out here by Larry, no question, prices pulled back. In fact, prices pulled back into one of the ideal areas if you were going to buy this based upon your belief or pattern and you were going to trade a hammer candle. I would tell you your best points to be able to buy that are going to be at about the 50% level of the wick. It looks to me like you're there, maybe you're right around that level, between the 50% level and the actual bottom of the wick. And the reason is because if you get a close below that hammer candle, whatever decision-making that you went through and said that that was a good time to buy would actually tell you it's a good time to exit and reassess. Doesn't mean price can't bounce up the next day, but a close below the hammer candle says if you're long, you're wrong. And in the case of the Shanghai, that would say 32.67 is where price would head to next. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go back to take a look at that Shanghai, because we only took a look at it from a weekly perspective out here. And so on a weekly basis, you've got the hammer candle for sure. However, if we go take a look, because we did close out the month, or we're going to close out the month today. The Shanghai closes out last night. You know, here's really the message off of that. The message off of that is simply that it more likely than not, wants to get down to the 32.67 level. I would say what you'd really like to see is it get down there and form a hammer candle or some other kind of reversal. With regard to the Shanghai, it just makes it so difficult when you've got all the shenanigans that are going on over there. I would say, if you can, try to find something that maybe is maybe something that offers a better risk reward, or in any event, that's my thought on the because if I take a look at the daily chart as well, I should have done that. Let's go do that inside the Shanghai. Is there any real reversal sign out here? It's reversal maybe to the downside. If we take a look, I guess the question that begs to be answered, was there a to B equals CD? Oh, why is this not working properly? There we go. Was there an A to B equals CD pattern that completed here to the upside? No, it didn't. That would have to get up into the 45.52 level for your next sell up there. So, yeah, the weekly's got the hammer, so for sure. And if you take that trade, just make sure you close it out when you see a close, if you see a close below that. So that was on to Shanghai. All right, let's go take, I flirted there just for a moment during that first break when we were talking about key reversal sessions. We were looking at it inside the IWM. And then I just simply mentioned, hey, how about Goldilocks? So now let's go take a look at Goldilocks out here, which had a nice spike after some numbers that came out this morning around 8:30. And if we take a look at it, it spiked higher, and that spike higher because they've been trading low during the morning hours out here. That spike higher created a key reversal session. Now that is assuming that Goldilocks finishes in the green out here. Now, I'm looking at the electronic contract out here. So if it does finish in the green, which means anything above the open, which was at 1087.70, it would be a reversal signal after being very close to that A to B equals CD pattern here to the downside. You could argue that it has completed that pattern here off of the swing point from the January 22nd level. So there's your A to B equals CD to the downside. It's certainly worth paying attention. Key reversal sessions are absolutely worth paying attention to out here. I don't see any others that stick out when I take a look. Stick out at me when I take a look at the at this gold contract out here. Remember, a key reversal session totally different than a reversal day. And it does have a lot of meaning. It is totally different. When you're coming from an extended condition, it really is the signal here that there is a impending change of trend out there. So hopefully that assists you. Let's go take a look at silver. I don't know what silver did here. I hadn't paid attention to it, but trading at 1474 out there. One of these days, we'll trade back to the $17 mark out here. And it looks like you got the same thing going on inside of silver, so long as it can close above $14.69 out there. Okay, so that covers a little. Let's go take a look at currencies, right? Well, we didn't take a look at the commodity of Texas tea, light sweet crude out here, off $1.20 as we take a look at it. And what have I got here? I've got the, it looks like the September contract up on my screen, and as we take a look at it, it did have a key reversal as well. That key reversal is right here on July 28th. So still very short-term bullish out here, so long as price does not close below 46.68. Doesn't look like a lot of promise. You saw a little bit of follow-through one day, and that was it. You'd like to see something more than that. Looks like this retracement is more than a 0.618 retracement as well out there. So light sweet crude does not look as healthy. And look, let's face it, if the gold chart starts to look like this as well, over the course of the next couple of days, today's key reversal may not mean a whole hill of a lot of beans out there. With regard to the currency pairs, euro, Japanese yen, boy, that had a quite a emotional ride to the upside this morning. It did that after those numbers. What was it? It wasn't jobs numbers because the end of the month out here. It was unemployment numbers, or whatever the Bureau of Labor Statistics puts out there. If you just imagine if they got rid of the that middle initial, because what's a Bureau of Labor Statistics, right? The LBLS, right? If they got rid of that middle initial, because you don't use your middle initial, all that time, all that often, do you? These guys don't either, because they're mostly feeding you and I a bunch of, that's right, a bunch of BS, I would say, out there. But in any event, the markets responded, and in the case of the euro Japanese yen, I should say, it had moved higher out here, but it has been moving higher anyways. It's got that little rising bottoms line that you and I took a look at just a while back. It's broken its descending trend line, which was in essence this trend out here for the most part. So it still is in bullish formation, but it's struggling to take over this little reversal signal here, the opposite of the hammer candle, and that is the shooting star, 137.79. In order for the euro Japanese yen to really get traction, it's got to make its way above that level. With regard to the euro versus the U.S. dollar, let's go take a look at it. It's trading. It also had a nice move early on It is the euro Japanese yen has got a nicer rising bottoms pattern than the euro versus the U.S. dollar. If anything, you can see the descending price channel here. So it looks pretty clear to me. We'll just use this white arrow. Whoops. Well, we're going to try to use a white arrow. I think there's a descending little trend line out here. Well, it actually broke through that one, but it did. It did. So it broke through one. Well, maybe it did out here. That's actually, I take it back. So there's your trend line. There's your trend line. We saw a quick break above it for about 2 days out here, and that is inside the euro versus the U.S. dollar out here. So what does that say? That says if it can't break that trend by moving to the upside, it says that this will go ahead and pull back. If this pulls back, what does that say? That says you go ahead and you put strength inside the U.S. dollar index out there. And that's what that meaning is. Now that we've taken a look at gold, silver, all the indices for the most part, a couple of currency pairs with no calls and no other questions that I see inside my email or anything. Let's go take. Priceline is the one that's the leader to the upside out here. Let's go take a look at a few of these stocks that are moving. Let's go take a look at LinkedIn, LNKD out here. And this is quite a wild stock. If you pull this stock chart back out here, you don't think that this stock is not. This would be considered a social networking type stock, right? And or a social emotional type stock. I mean, take a look at this thing here. You talk about this has got gaps all over the place out here. I mean, truly. Of course, the biggest one, the one that is of most concern for anybody who is long LinkedIn, in my opinion, would be that island top out here. This one right here. I mean, this is the it's not Giggle. What was it? Gilligan's Island. I guess I was thinking of the Giggling Marlin. Pretty not the best to go put that together, but some of you who've been down to Cabo San Lucas, you know the Giggling Marlin out there. Well, this looks more like Gilligan's Island. And what I'm referring to, and I'll go ahead and just draw the box around it, it's right here. That is your rather large island reversal out here. That took place between the time period of February 6th, where you had the gap up, and oh my goodness, just a total blown apart move back on May Day. May 1st out here, 16 million shares to the downside. And that is the largest fundamental threat to LinkedIn. Nothing wrong with the entity and the service, but there is nothing more fundamental about a company and its message and what it does than the technical patterns as far as what buyers and sellers are doing. And at this stage here, that is as bearish as you can get, because it's not a one-day bearish signal out here. This is a nasty one. So today, what do you got? You got LinkedIn down with volume. What does that say? That says that LinkedIn, the area of support that it's trying to hold is right here. It's right really off of the 186 type area. And that is very likely where LinkedIn is going to head to next. It's got a swing point down here just from back in May 18th. It's not down that low. But with the volume that's being pushed out of it today, it looks to me like that is where it's headed to, about the 186. If it gives way there inside of LinkedIn, then you've got the large A to B equals CD to the downside, and that probably takes you all the way back down to the bottom. That A to B equals CD starts from the island back on February 26th down to the May 18th low out here. Maybe I'll get it there, and all the way up here to the high on July 21st. Yeah, it does. That would give you a price projection in the 148 level, and that will take you all the way back down into the swing point here from May of 2014. So 186 is a really important level for LinkedIn to hold. I have a question out here asking about Disney. LinkedIn, lots of three-gap plays, some bigger than others. Let's take a look at Disney out here. And as we take a look at the question is, has Disney topped out or close to it? Well, I don't know. Disney's out with earnings come next week, I believe. So it's at an all-time high, 120.35 on a daily chart. There's not a thing out here that would suggest to you or I that any patterns have completed and that the move is over. So that looks pretty good. Let's look at this on a monthly basis inside of Disney. Well, that's so strong that we can't even use our A to B equals CD patterns out here. So let's get rid of that. Come on, do that. There you go. There's nothing that I can use there on a monthly basis. Let's, as far as patterns, and that's a mighty fine, strong-looking stock chart out there from a monthly perspective. Let's go see if we can do some wave counting out here. What chart can I use for that? Can I use this? Let me see here. Looks like I probably can. Let's try to put up Disney DIS. Let's go see what it is doing. We'll go convert this to a monthly basis. Give me a moment here. We'll put it on the monthly chart. We will see what it is doing out here. And as we take a look at it, all right, so we're going to come down off of this one. And, boy, I tell you what, Disney didn't have that gap. You know what? I don't know why why this chart here has done that. So I don't even know that we can rely upon it. I'm just going to have to answer the question. That was that big, wide-ranging bar out here. I wouldn't be shorting Disney, that's for sure. So if the question is, has it topped out and once you take a short in it, I don't see anything from that standpoint. Let me do this. Let me take a look at one of the momentum indicators out here. And as I put this one up on my screen, let me see. Has that said that it's topped out? No, let's put this on a daily time frame here. Give me a moment to do that. And on the daily time frame, no, Disney looks pretty good. So if Disney's topped out, somebody knows something ahead of time because it certainly doesn't look like it to me here. Hopefully that answers your question. Peak D inside the Tiger stuff. Hey, you know, let's go. We've got the Dow's off 30 points. S&P is up 90 or off 90 cents out there. Real quickly looking at the summation index again, everything's above zero, so all is well there. If we take a look at, we haven't looked at this chart today. We had been viewing this as, hey, what's going on inside of the futures market for the ES Mini. Let me turn a couple of these things off here, make it a little bit easier for you to take a look at. Let's turn off our market profiles first. Let's go ahead and turn off our retracement levels, if I can find those. Fibonacci retracement levels. Okay, those are off. Let's turn off that horizontal line. That's not in play. Let's turn off one of these channel lines out here. That's not the one that we want. We're going to turn off, if I can find it. There we go, this channel line out here. Okay, so here's a little bit cleaner picture with regard to what's going on inside of the ES Mini. This is a 2-hour chart that we're taking a look at. Right now, what you and I can see as the 148 time period is we can see the price is just coming back and testing a very key level of support out here. That level being 2100, 2099.61 is what it says on my screen out here. Of course, we know that the ES Mini doesn't trade. It only trades in quarters, so it's really 2099.75 or 0.50 out here. So prices come back to an important level of support. If, in fact, we see price close below this 2099.61 area, then that carries with it some different meaning out here. But right now, what's that meaning? Well, until we get there, you know, I won't know. I would say what I would take a look at, I'd probably go take a look at my market profile. So if I turned off my horizontal trading ranges out here, it would say that, hey, if it breaks through this area, that diagonal and horizontal level, then where price probably pulls back to is about the 2096. You get below 2096, price moves down and it tests the 2085 area. That's my take on the S&P futures contract. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 32. S&P is down a point. Composites up 7. Russell's up 9.5 points out here. Gold still up $7. Silver's up. Nickel out here. Let's take a look at a couple of the mining equities, see how they're doing out here. Let's take a look at gold. Rand Gold Resources out here, see what it is doing. And Rand Gold Resources, gapped up today. You don't see, I'm not talking about a gap so much between price other than just looking where it closed yesterday. Today's volume, though, light volume, 312,000 shares. To the downside, it had about 1.4 million shares back on July 20th. Now, Rand Gold out here, it's poised, like many of the gold equities, that if this thing could gap up, for example, on Monday, I'm not saying that it's going to, if it did gap up above $61.41, you're at 60.45, so it's only a buck. can easily do that, then that would absolutely be your signal to go ahead and fire away at the long side of Rand Gold and maybe most of the equities out there. That would go ahead and form a very nice island bottom pattern. Right, we took a look at the island top pattern. We took how about that? We took a look at the one inside of LinkedIn. Of course, you've got the most memorable one is the one inside BIIB, right? BIB. That's the one that David coined. Nabbed out here. BIIB. I don't know when he actually took the short position, but I can tell you that it gave you the signal on the trading day of March 25th, 2015. I don't think he took it right then and there, but that was your signal. You got that nice island top. So like the question of, hey, has Disney topped out? When you look at that stock chart, I can't come up with any reason why it has. If somebody asks the same question with regard to Biogen on the trading day of March 25th, we could answer that, yeah. Hey, you got a high volume high. It says at some point in time, price may get back up to that, should get back up to that. But what we've got here is a nice little island top. Whether or not we get that inside some of these gold equities like Rand Gold, AEM, let's go take a look at Agnico Eagle. We looked at that yesterday in pretty good detail. It did close below yesterday at that 21.65. You're above it today, 22.11. The weekly basis, you probably are going to get a rejection of a swing point on light volume. That volume that you're benchmarking was 18.4 million, and you're at 15.8. So it looks to me like you've got a rejection of a swing point in AEM, Agnico Eagle, mines on light volume. No bullish reversal signal here as of yet. Even on the daily chart, so you'd really have to stretch and go down into a intraday chart in order to find that pattern. Hey, any type of a gap up above the 24.57, you would also have a nice little island bottom out there. So that's what's going on inside the markets. I want you to stay tuned because we got our man David White. He's up next, and we've got Tom O'Brien. We had just a little bit of a conversation inside the Tiger's Den during that last break out there. So we'll go ahead and we'll finish this off, and it was about cold sake. Folks, if you like sake, if you like cold sake, here's what you do. Call ahead to your favorite Japanese restaurant and tell them to go ahead and stick it in the freezer ahead of time because you like to have cold sake really cold. Now, maybe you've never tried it before. I would tell you it's one of the best, smoothest if you get good cold sake, and that's really the key. I will tell you that many good Japanese restaurants, they will carry some cold sake. You have a county that you live in. In Japan, they call them prefectures. Most of the times, it's printed on the bottle. If you can find one from the prefecture of Niigata, Nigata, there's some other good ones as well, but that one's a more common one. If you can find that, that's the one to order, but have it when it is super cold. And one of these days, I'll tell you about my first sake experience in Wakayama City, where I think I may have been the only 6-foot blonde-haired white guy that they had seen on the streets at those times. And that's where Stevie-san learned how to drink sake. Folks, have a great weekend. I look forward to seeing you on Monday. Stay tuned. Our man David White is up next. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.